Welcome to the Best of Investing. I'm Edward Brown, your host. Here's our format. A bunch of guys sitting around a bar. There's no bar. Having drinks. There's no drinks either. But we're talking business, and you, the audience, are listening in. The Best of Investing is actually a radio show that has been around since August 2010, and it airs every Saturday on Fox News Radio, 9:10 a.m. at 1 p.m. Now, we're not a political show. We're strictly business, so everyone will be happy with that. We'll have various speakers, guest speakers, attorneys, accountants, economic advisors. But the cool thing about this is that you're actually getting to see scenes behind the scenes. So we all have headphones on because we're recording a radio show that is going to be airing on the air on radio. But in addition, you get to see what happens during the commercial breaks, how we prepare for the next segment. So it's a lot of fun. There's going to be a lot of levity because I like to try to throw a little bit of humor in there because, just business by itself sometimes gets a little boring. So you got to always kind of break things. Remember, I'm Edward Brown, wishing you the best of investing. Are you ready? Let's go. Welcome. You're listening to the Best of Investing on News Talk 910. This is the show where we present valuable information about real estate, the financial markets, and other economic business of the day. And there we have some new listeners. So for those people, here's our format. A few guys sitting around a bar having drinks without the drinks, talking business with you, the audience listening in. Yeah, a couple of empty cups there. All right, guys. I'm your host, Edward Brown, and I'm pleased to have as my co-host Mark Hanf of Pacific Private Money, California's fastest growing private lender, and Robert Schiff of RPM Mortgage. Now, our phone number is 888-912-1190. Write that number down, 888-912-1190, because you're going to use that number to answer the trivia questions for 3 vacations given away during each commercial break. You got it. We're giving away 9 vacations during this show. Theme is famous comebacks in sport. Don't forget to catch us on television. Comcast Channel 26 on Saturdays at noon and Sundays at 6 p.m. Mark, you taught a 2-day workshop. Tell us what happened during that workshop.
The owner of that company had invited me to come up and talk to a class of 40 for 2 days, and the topic of that was attracting private money. And so we realized that we kind of created that topic out of thin air earlier this year, speaking with the owner of the company when I told her that my company, Pacific Private Money, we're now having our 4-year anniversary this month, August, but at the time this was about 6 months ago. We were 3.5 years old, and I said, we've done, nearly 400 loans, and I've attracted over 300 private investors to the company. And she said, oh my gosh, you should really come and talk to my class about that, and because everybody's always trying to figure out in this business, if you're a real estate investor, if you're looking to buy real estate and maybe you don't quite have the piggy bank you used to have before the real estate market adjusted in 2008. And so she said you should come up and talk to people about raising private money and share with them the experiences and the kind of what did I do the last few years to kind of attract people into my particular company.
Won't they kind of create a little competition for you though?
So were the people taking the class looking to invest or looking to try to get people to invest?
Probably replicate what you did.
That's what I was thinking.
Yeah.
Well, and that's what everyone says to me. They say, Mark, why would you do that? I mean, here you are, you're a hard money loan broker. Why would you educate real estate investors on how to circumvent you and how to go out to the community at large and raise private money? And the theory of it is that, first of all, we don't do 100% financing loans at Pacific. In fact, very few hard money lenders or private money lenders will do that. They generally require that borrowers have skin in the game. Well, a lot of borrowers out there, or I should say a lot of potential real estate investors out there, people who are interested in getting back into the real estate market, they may not have the capital base, or maybe they have just enough capital to do one deal but not the next deal. So they're in need of an equity partner or a joint venture partner or just equity capital in general. And so in a way it is self-serving for me to go out and say, hey guys, here's how you can go out and find private lenders. Here's where to go, here's what to say, here's how to put together a credibility package. Here are the steps that I would recommend you do to go out and find an equity partner. And then when you find that equity partner, come to a reputable hard money lender like me, leverage that equity, because quite frankly, in this day and age, we know that yields are a lot thinner Profits are smaller than they used to be. No one's making the $100,000 per flip that they were in 04, 05, 06. But so nowadays, in my opinion, you shouldn't do 100% all cash fix and flip deals, for example. I think the yields are too thin. I mean, you're lucky to make 15% oftentimes on a project. But if you leverage
that's like being just a regular contractor at that point.
Well, that's just it. So, but what if you borrow? What if you use half equity and half borrowed money, or maybe 40% equity and 60% borrowed money through a hard money lender? The returns to the equity investor go up dramatically. And what I teach the investors in the classroom is or the potential real estate investors in the classroom, I say, listen, guys, your job is to make your equity investor very, very happy.
Sure,
your job is to make him money.
Another deal with
so
you.
Don't go out and find a guy with $200,000 and then go do one project. Go find a guy with $200,000 and do 2 or 3 projects. Leverage that money. You're going to make him a much better yield, a return. He's going to be fabulously happy, and he's going to want to do more projects.
Okay,
with you.
so you're not necessarily teaching people how to be a hard money lender.
No.
These are real estate investors who you're trying to get the equity for. Oh yeah, that's definitely self-serving. It's fine.
Right.
I was trying to understand what kind of.
So you're saying to them, you're not ready to come to me and use all your money in one deal. Why don't you, here's some hints that I can give you to go out and find other people that you can partner with so you have a bigger lump sum to make as a down payment on several deals, and then you can come to me and we can do the hard money loan because you're just putting part of your money up. You're not putting all your money up, and nor are you asking us as a hard money lender to go out over 65% of the loan.
That's exactly right. See, I don't want to do high percentage financing. In my business, we're very comfortable making a 65 or 70% purchase price loan. We can write those loans all day long, but we get calls at our company saying, hey, do you know where I can find equity partners, or will you introduce me to some of your private lenders as an equity partner? And my answer is no.
Exactly.
First of all, you don't have a relationship with these guys, and I can't hook you up with a perfect stranger. First of all, I don't know you, and why would I refer you to one of my private individual investors? And he would blame me if things went south. But on the other hand, if you're out there, if you know how to correctly put together like I called it earlier, a credibility package on yourself. Maybe it's your experience, it's your bio, it's your resume, there's all kinds of information. There's like 10 key components to a credibility package. You take that out, you go to networking events, or you go to your friends and family and say, look, this is my plan, this is what I intend to do. I'm going to go out and I'm going to invest in this type of property. I'm going to write lots of offers, and I'm going to work with a team that includes these people. Maybe you're a contractor, or maybe you have a contractor as a friend. And all we need is, I need this equity, and we're going to work with a hard money lender. So there's a formula that you can employ, and so a lot of people don't know that, and so the classroom that we did this week was essentially just to teach people how to do that. And what's interesting is, as a real estate investor or a budding real estate investor, there's a lot of classes you can take on how to buy property, how to write an offer.
Just not where to get the money.
Where do you get the money? So,
how much did people pay to attend that?
That one was anywhere from, if they sign up early, it was $1,000 up to $2,000, which in my opinion was really inexpensive, given that you can pay easily $5,000 or more for some of these boot camps. But this was the first time that I had done it, and the reviews were very well received, and we're going to do some mastermind coaching with about 10 of the students from that going forward. But I'll probably do this again in another 6 months. Maybe we'll do it twice a year. But it was a lot of fun. It was a great opportunity for me to create a lot of written and visual substance. I had to do a 200-deck PowerPoint slide presentation.
Oh, wow.
And so now I've got lots and lots of material that I can use for future video, maybe some audio, maybe even blog posts, etc. So for me, it was almost like writing a book. As the clock ticked and the days crept closer to this 2-day class, standing up for 16 hours in front of a group and talking about a lot of different topics. It was a lot of work to run a busy company and to provide and create all the material for this classroom. So it was pretty exciting.
It's probably also pretty intense. I imagine people, group of 40, it's probably a big outlay for them, and they're very anxious to have that outlay pay off. So,
exactly, yeah.
Yeah, I promised them at the beginning. I said, look, my goal, guys, is to create 10x value. I want you to feel like you are taking away 10 times what you put into this is value. And of course, if they follow my steps and go out and find private money and find the relationship with the guy who might, for all might invest in $1 million worth of real estate with them in the next 12, 24 months.
Oh yeah,
I mean,
it'll
it's
definitely pay
totally
for
worth
itself.
it, right?
Absolutely.
Exactly.
Okay, hey guys, we're going to cut to our first commercial break. When we come back, we're going to get into email time and then a few other interesting things like the Facebook situation with all the investors.
Oh, yeah.
So the audience, listen in because I'll give you a few little tidbits about Rule 144 stock. All right, here's our first commercial break. Here's our first trivia question. And we're talking about famous comebacks in sports. Game 6 of the 1986 Mets was one of the best comebacks in World Series history. What team did they beat? And we'll be right back. Excellent.
Awesome.
Okay. You guys know the answer to that one?
I don't.
Nope.
Niners. No.
So they beat the Mets. It was 86.
86.
Wasn't Boston.
It was Boston.
Was it?
Boston Red Sox, yeah. Calvin
Oh.
Schiraldi, I think, gave it up. And Oil Can Boyd, remember him?
Oh my
Oil can.
So I heard a guy on the radio this morning. This was great. He said he has this image that the Giants beat the Dodgers, or they get the playoff and they win, and they're in the.
Hey, Edward,
it's gonna
what's on your
happen.
foot there? Let me
I
see.
called a friend
Oh,
and
there
said,
we go.
thanks for the tickets with the
Maybe
game.
the
He said, it's
close-up.
a bummer, huh? I said, what? It's a beautiful day. He said,
case
"I'm
of
milky."
emergency,
He said,
pull
what
the
about it? He
sticker
said, oh,
off,
shit, I
fast.
ruined the game for you.
No, fast.
I didn't know.
Don't worry about
Yeah,
the
I
pain.
didn't. I was
Where
watching
are
the
they?
game and they were talking about Melky, and all of a sudden, either I had to go look.
I've got to
it
worry about the
up.
pain.
It's
You don't
just
have to
like,
worry
oh,
about the pain.
suspended
That's
50
right.
I
games.
understand these people.
I don't.
Greed. Goes back to, again, Latrell Speedwell, remember?
Oh
He
yeah.
wanted $100 million, and they said, well, we'll give you $90 million, or something like that, right? He goes, oh, man, I got to feed my family.
I know that
Really?
sounded
What do you
pretty
feed
lame.
them? Gold cornflakes, you know?
Those gold hamburgers they charge for $80 in New York.
Yes, exactly. $200
No,
for
really?
Yeah, there's
Okay.
actually a
No.
hamburger with gold flakes on it. I saw pictures
Oh, is that
of it.
what
It's
it
like
was?
it's like $80.
Or what about
It's
the hot
just-
dog, the one that's,
Rolling.
is the audience ready?
The audience is always
The audience is always ready, yes.
Oh, the film. Darn.
Yeah. Don't do that to
so
me.
bad.
Nope.
As Homer Simpson
Nope.
would say.
Nope.
Okay, you ready?
Yep.
Okay. And away we go. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hanf of Pacific Private Money and Robert Schiff of RPM Mortgage. And when we cut to the first commercial break, we ask this first trivia question. Again, the theme is famous comebacks in sports. Comeback in sports. Okay, Game 6 of the 1986 Mets was one of the was one of the best comebacks in World Series history. Who did the Mets beat?
Well, it's the Mets. I know they didn't beat the Yankees, so
Nope.
my guess was probably the Boston Red Sox.
Boston Red Sox. That's right. That was the one, the famous one through Buckner's. Yeah, you're
Oh,
thinking of
that's
the,
right.
Yeah, the Mets. That. Excuse me. The Mets Yankees. I think that was the 2000 Subway Series.
Did you ever see the Seinfeld series where they had Buckner on?
They had Keith Hernandez. Remember the one
no,
with,
no.
with
They had
Buckner?
the guy that the ball went through his
No, I
legs.
didn't see that one. I'll have to check that
Yeah,
one out. Okay. Email time. Robert, we received an email from a listener. It says, I'm looking for a loan and wondering the best time to lock in the rate because interest rates have gone up recently. What would you say to that person?
I would say join the party. We always are trying to figure out the best time to lock in a rate.
Yeah.
I mean, in the past, before more than 5 years ago, some of the banks and we were able to have clients lock in a rate, and if the rates went lower, we were able to get the lower rate. Now that's
Like
not
that.
the case.
Yeah, just
that
keep
was
it. That's an
the
open
old, the old
situation.
lock and drop policy, but now that's not happening. When you are looking for a loan and you go to the bank, or I mean, RPM is a mortgage bank, but when you go to us or to a bank and you ask them to lock in the rate, they pay a fee and they guarantee that, and they pay a fee for it. So
Okay, so
they're
let me
It's
ask
an
you.
insurance policy, right? Basically.
yes,
yeah.
an insurance
Yeah.
policy.
Okay, so RPM also, you said that you're a mortgage bank, but you can also broker. So does that mean that if for whatever reason, if RPM doesn't seem to have the best rate at the time, you can shop it around?
Yeah, that's a good point.
That's pretty cool.
RPM can go ahead and process and fund the loan themselves and keep it, or they can fund the loan and sell it to other places, or for us to make sure we're competitive, if they, for whatever reason, aren't at the market, or there's some other bank or credit union or mortgage bank outside of the normal channels that has a better rate, we are available.
So your higher ups don't mind if you.
They mind, and I tell them the way to have me take all the loans to them is have them be
Be
the best rate.
competitive. Yeah, exactly,
'Cause, if they say I'm their client, I tell them fine, then treat me like I treat my clients, which means I'm going to go wherever I can get them the best loan. Otherwise, I
Reminds
wouldn't
me
be in
of
business.
Miracle on
so.
34th Street when Santa Claus ends up saying, "Hey, go to Kimball's instead of Macy's."
Oh,
Just being super
yes,
honest.
yeah,
Appreciate
yeah,
that.
yeah.
So what was the rate bump this week?
Well, I mean, there's always Monday morning quarterback when the rates go up or down, and we have some news services that supposedly give us a slight advance notice. It could be an hour, it could be a half an hour. Watch out, we think the rates are going to go up. So if you're in the process of doing a deal, maybe you want to lock right now. And that didn't occur this time, but in the past, just this past few days, rates went up about 0.25% in interest rate.
That's a
which
lot.
Is a
That's a
lot.
big
lot.
increase.
It's a lot.
What's the market attributing that to?
Well, I mean, nobody could say, and then today I read one of the blogs we get, and it said it was partially because the economic lookout for Europe is not as precarious as they thought it was right now. Of course, we've seen that several times.
So
and
good
there's
news
no-
is bad news for
well,
interest rates.
yes,
Exactly,
yes. Good news is bad news, and then the economy looks like maybe it's not as bad as we thought it was, and therefore the government probably was less inclined to do a quantitative easing like they've done twice.
I wonder how much of that is politics behind the scenes, where it's like, oh my gosh, the market really is, the economy's really bad, but politics say, you know what, let's just say that it's not so bad, and then
Well, maybe it's because